Remember, discipline is on top of everything when it comes to trading Forex. If you mess up one time, you're gone. Any mistake, you pay for it. There's no boss to make noise on your head or to breathe down on your neck, but the markets are not forgiving. You make any single mistake and you lose money. Hey guys, what's up? We're back at Ken's Money Matters today and we're going to be talking about trading. This particular week, I'm just going to do trading apart from the raw and real on Wednesday. So the Monday and the Friday is all going to be Forex trading because a lot of people are asking questions. So I give you the information as usual. What you demand is what I give. Your wish, my command, right? So this time we're just going to do trading for this week, for Monday and for Friday. For Wednesday, I have some discussion that will just come up that I want you to be part of, come up with this new system called the Raw and Real Wednesday, where we just have our discussions on money issues or money, topics that are trending that you want to talk about, and you can always contribute. Otherwise, Monday, Friday, trading. So if you love Forex, you love making money, some cash flow, remember, Forex trading is not an investment. That's not how I look at it. From a financial perspective, it is like a business or like a job that gives you cash flow. Now that cash flow is meant now to give you some income that you can use in other investments, but doesn't mean you can't invest in Forex. There are so many people like George Soros made billions out of investing in Forex, not trading it, but investing in it. So they could hold positions for long. The only difference is the duration. Most people I'm speaking to or most people I train just want day trading, whereby they get into the market within the day. By the end of the day, when the market closes, they're out of that market. So it's a very efficient way of making money or having cash flow on a side hustle. And in an era whereby everyone is trying to make some extra money, you can make it from the comfort of your home. Like right now, I actually do trade where I'm sitting. So it's quite easy. It's quite straightforward, easy, flexible, gives you good money if you know what you're doing and you have the right strategy, right skills. Like I always say, invest in yourself, make sure you have the right skills. And trading psychology is the biggest thing you can ever imagine. Master your emotions, master your personality, know what you want, what is your objective, what are your targets in the market. Remember, discipline is on top of everything when it comes to trading Forex. If you mess up one time, you're gone. Any mistake, you pay for it. There's no boss to make noise on your head or to breathe down on your neck, but the markets are not forgiving. You make any single mistake and you lose money. You stressed, you lose money. You wait too long, you lose money. You are too hopeful, you lose money. You are too patient, you lose money. You lose opportunities. So you have to have a critical balance of everything. Personality is everything. That's why when I'm talking about Forex trading, rarely do I even give people skills here, because some of the skills I have to give one-to-one, basically training them. It depends on someone's personality, someone's objectives, someone's what we call the temperaments. So that's why I do one-on-one coaching. I don't do classes. I did try classes when I was starting and it did work. I tried one of the best classes actually in London, and just terrible, because you are a group of people with different aspirations, different objectives, and then you are put into one class and someone wants to teach you trading. No. Get someone to mentor you if you want to trade well. Otherwise, let's get into it. So today we're going to be talking about support and resistance. Support and resistance. So we're talking about support and resistance. I'm going to help you use just two things to improve your trading and you can start making money. You don't need to know anything else. You don't need to know all the other details. You can actually focus on using support and resistance in the market and you will make money very efficiently and you can be very consistent. What it requires is using that same method for a period of time, testing it in the demo accounts, and making sure that you have very sharp entries into the market so you don't enter too late or too early. You must have very good points. You must identify those nice resistance and support points. So I will show you on my laptop, but before that, let's ask ourselves, what is support, what is resistance? That's very important, right? Because some people who are watching have never known about these things. So the market moves in waves. So if you opened any chart before, any Forex chart, you know that the market never goes in a straight line. It's always moving in different waves. So when it's moving on those waves, it forms a pattern, which you may not see in the first instance, but there's always a pattern to it. So when you get into the market, you want to identify what the pattern is. And that is the bulk of technical analysis. Everything that you do with regards to technical analysis should actually fall back on support and resistance. Where does the market hit up on the ceiling? Where does it hit up on the floor? So resistance will be the ceiling and the floor will be the support. So the market will have a pattern. I'll show you in real time what I mean. So usually when it trades in that particular zigzaggy manner, there's definitely a pattern to it, and you want to identify at what point does the market reverse and come back down, at what point does it reverse and go back up. So you need to identify those points. We call them price reaction points. So price is reacting. If it was going up, meaning there were more buyers, it reaches a point, there are more sellers, so it comes down. They push the prices down. And then at some point again, the buyers come into the market, then they push the prices again up. So it's always going in that sense, up and down, up and down. You want to identify what pattern is it and how can you use those patterns to make money in the market. Very simple, right? And if you use this efficiently, you'll make money. So like I said, it's very straightforward, right? So welcome to my screen here. You can see very well. Support and resistance is the easiest way you can make money in the Forex market. And this is one thing that people do ignore. You want to go to very complex indicators where you can simply use what we call the naked trading strategy. And by the way, get prepared for my upcoming book on ultimate trading strategy that I've been using to make money consistently that you can actually use. So if you look at this, for example, this is a very straightforward thing. Like I said, the markets always move in zigzags. It's always moving up and down. So you can see the line 1 is basically the resistance. So that's the top point. And then we have line 2, which is this, the floor, which is the support. So it's supporting the market when it comes down. So the market goes up, buyers are in control. When it hits this ceiling, the sellers take control, and you can even see very good candlesticks there. Then it comes back down. I'll talk about candlesticks in another video. It comes back down, it hits here, and you can see another informative candlestick. It goes back up, and there's a minor resistance here, but we are looking at the major one. Always remember you have to spot the major resistance areas, because you may end up cluttering your chart with so many lines, you don't even have the opportunity or the chance to read the chart properly because you have too many lines. So try to avoid drawing too many lines. Always when you come to the chart, I'll tell you how to do it. I'll show you. The best way is usually just do the obvious ones, okay? Just draw the obvious lines. Don't worry about the small ones or the tiny ones. So yeah, the market comes down, hits the support, goes up, hits the resistance. Very simple, right? So you want to identify these points so that you can easily enter a market at the right place. Remember, it's not just the line that will inform your entry. There are other things that will inform your entry that we can't get into. For example, the candlestick type can inform your entry. A good pattern, like a double top like this, what we call double top, this could inform your entry up here. So there are many other confirmations you would want. Remember, the more confirmations, the better for you. Easy, right? Drinking some water. So that is just one example of a simple normal chart. I always use IG, I use TradingView, I use eToro, I use XM to trade. So yeah, I use different charts really. I don't mind any chart. Let me show you more. As you come here, you can see again, we have major and minor resistance and support. So the market is going up, buyers are in control. It hits this minor resistance, comes back down all the way to the strong support. If you're just starting out, look out for the major one. So you're looking for this major support, you're looking for this this resistance. This is actually not a minor, this is a mistake. This should be a major one. And then you can see it broke it up here, formed another resistance with another support and a strong resistance up here. So these are basically the support and resistance. The market is never moving in a straight line. So for example, in this market, you know very well that it's trending up, and I'll talk about trending markets and stuff. When the market is trending up and it comes back to a minor support, we are calling it a pullback or just a breather basically. So it takes a breather, goes back up. Very simple to trade, right? You don't have to have indicators cluttering your chart for no reason. Now let's go to the real chart and see what's happening. I love AUD USD pair. I always trade this pair. I love the GBP USD too. I love GBP JPY, not as much sometimes. USD Japanese yen, that's good. It's a good pair, a really good pair. I think I was trading one of them. Let's see. Am I trading this one? Yeah, I'm trading this one, and as you can see, I'm up 1,652. This was, I took this on the real account. So usually before I take any trade, I make sure that I've tested it here before I take the real trade. But this is a swing trade. It's not a day trade. So guys, forget about that. You can make that money easy, but let's see which one would give us a very good illustration. Is my favorite here. So we are on the hourly chart. Now, it depends on which chart you're trading. It depends on what type of trader are you. That's why I do one-on-one coaching, because everyone has their strategy, their plan, and timings, of course. Some people have a lot of time to trade, so they can do scalping, they can do day trading. Some people don't have that time, so they want to do swing trading or position holding or something. Yeah. So if you come here, you want to draw your resistance. Easy and simple. Easy and simple. What do you do? Number one, make sure your chart is as clean as this. This will help you to know where to spot the strong support points and resistance points. And from this chart, obviously, you can tell. Now, one secret and one tip I always do is to minimize it a little bit, zoom out a bit, so that you can see the historical touches on that particular point. Because if you zoom in, you may think this is a very strong point, but historically it's not. So you also want to zoom out so that you can see a larger time period and give you a more holistic picture of the market, right? So you come here and you can see this market has been trending down, clearly trending down, really. Trading is so easy if you're actually consistent and you're disciplined. It's quite easy. So this market has been coming down, simple and clear. So how do you want to draw your resistance and support? I usually use this. So I can see very clearly, my laptop wants to go off. I can see very clearly there's a strong support here. You can see this is a very strong support point. You come here, you can draw a second one. Always you have this drawing. You can have this drawing tool here. So you can show the drawings, indicators, and everything like this. You can also show the HLOC data, which is the high, low, open, close data. I don't like seeing them, but I want to show the drawing toolbar down here so that it's easy for me to spot. So you just come here, the horizontal one. You want to draw, I can see a very strong resistance point there. It's been touched at least 3 times. So the secret, again, another tip, make sure that the point has been touched at least 2 to 3 times with a strong market move after touching it, not just a minor market move. So it hit it and then there was a proper pullback or a proper run upwards. So it depends on whichever direction it's going, but make sure there was a proper move after it touched that point. That's how you get to spot and know really good points in the market. So that's one there, you can see very clearly. This is a minor one, you could draw it, but it's unlikely because it has a support around this area. So yes, it will be a minor resistance here, but it also has very good support. So don't overthink this. Don't overthink this. Just come here and just draw these points. And remember, always remember, and this is a very important point, guys. Let me look at you in the face. Remember, anytime you're drawing it, this is not just a line, it's an area. So in your head, you should know this is an area, not a line. Remember that. It's a price reaction area. So it doesn't have to touch your line. The market doesn't know you. It doesn't know your line. It doesn't care. But that area is what we call the price action area or price reaction area. It means when the price gets around that area, it reacts. So sometimes it may not exactly touch on your line, but it will still react around the area. So those are areas to watch, right? Areas to watch. Yeah, and I think we have everything we need right now. So on that market, really, I think we have the major points. That's the hourly, if you're trading the hourly. But usually, if you come to a much higher timeline, those lines are very, very, very tiny, as you can see. So if you are trading on the daily, which is like swing trading, you want to draw it on the daily. If you're trading on the 4-hour, you want to draw it on the 4-hour. But usually, you can even draw different colors, so you know which ones are for which hour. But you don't want to have a very busy chart, because you want it to have some space for you to see what's happening in the market. If you're doing the 1 hour, 3 hour, this will still work, and this is still quite okay. And you can even see another strong one down here. So if you want, you can draw one down here. If you're trading the 3 hour, depending on which timeline you're trading. Most of the time, people I'm talking to trade 1 hour. They are day traders, so they care about what's happening on the 1 hour chart and even below that. If they draw support and resistance on the 1 hour, they're good to go. So it doesn't matter what time frame you're trading. It's not even important right now at this point, but you just make sure that you touch the main points and you have them. Now, with this kind of line, I can clearly tell. So let's now zoom in, right? Go back to our 1 hour where we were drawing. To zoomed in. And then now we can see this is a very nice one. And this one is a good chart pattern. We'll talk about chart patterns. Let me know in the comments below if you think we should talk about chart patterns. They are really good for trading. Chart patterns, candlestick, entry points, and stuff like that. So you can see this is amazing. This was an amazing trade, I can tell you. This amazing trade. This on 20th of September, you can see it hits this level, goes back up, hits this level, goes back up, hits this level, goes back up. What happens when it comes back? It's gonna hit that level probably down here and go back up. Very simple, right? It's a very simple thing to do. So your work should basically be to, identify these points. Identify the points. That's such a big one, God. Yeah, identify these points of price reaction. So you need to watch out in the future and see what will happen. So that's basically how you use support and resistance to improve your trading. It's a very simple method, guys. Very simple. Just watch out for where the chart is reacting, where the price is reacting, and make your trades. With regards to entry, we will do that on a different video, so we don't make this too long. Thank you, guys, and see you on our next video, which will be about moving averages.
One's a company, two's a crowd, three's a